Welcome to Epoch Report, where we look past the headlines at the structures underneath. Today, the reshaping of global trade routes as the Strait of Hormuz's threat becomes a catalyst for permanent change. We examine how China's Arctic container route, the UAE's trade cut with Iran, and new corridors like the Caspian Express are redrawing the map of commerce. The dialogue reveals that a closure doesn't need to be physical. Insurance premiums, naval escorts, and the constant threat have already pushed major shippers to reroute. The market is pricing in the risk, not the event.
But if that were true, why is the Suez Canal still handling record volumes? I've seen the numbers. They're not collapsing. A 20-day Arctic route sounds good on paper, but it's ice-dependent for what, 4 months a year? Right, Suez is still busy, but the marginal shift matters. The Arctic route is extending its season each year. Climate change is making it viable for longer. China's investing billions in icebreakers, not as a contingency, but as a permanent lane. So basically, the Ice Silk Road is a climate change dividend. But let's talk about Iran. The UAE halting trade with them sounds huge. How much of that is real decoupling versus just a temporary diplomatic freeze? The UAE halt covers all trade and financial transactions. That's a total cutoff, not a freeze. Reuters via Reddit 2026-119. Iran loses its biggest regional trading partner. This is structural, a rerouting of Gulf commerce around Tehran. But Iran still has China as a buyer for its oil. Don't they just swap one partner for another? The economic isolation narrative always underestimates how much Iran can lean on Beijing. China's buying crude at deep discounts, and it's not paying in dollars. It's bartering goods. That's not a rescue. That's a dependency. Iran's leverage in any negotiation with China is nearly zero now. So Iran trades one master for another. But what about the Caspian Express? Russia and Iran building a corridor together. Isn't that Iran gaining leverage, not losing it?
That corridor is a lifeline, sure. But look at who controls the rails, the ports, and the customs. Russia is the senior partner. Iran gets a route to bypass the strait, but it's paying in political capital and economic concessions. Put it that way, so Russia and China win, Iran loses. But what about the U.S.? Isn't the closure of Hormuz, or even the threat, just as much a problem for American allies in the Gulf, needing that oil out? The U.S. pivoted years ago to self-sufficiency in energy. Its Gulf allies are pivoting to Asia for markets. The closure doesn't hurt Washington the way it once would have. It's actually an opportunity to reorder trade toward friends. So it's a realignment of the global order, orchestrated around China and Russia. But here's my tension. If the Arctic route is so great, why hasn't a European country or a Gulf state invested in it? Why is it just China? Europe's trapped in collective action problems. They need consensus on sanctions, on Arctic governance. China moves unilaterally, and that's the point. The Ice Silk Road is a geopolitical flex disguised as a trade route.
Okay, but let's go back to the original premise. The Strait of Hormuz, the actual closure. If it happens, even briefly, isn't all this planning just holding the line until the U.S. Navy reopens it? Doesn't that invalidate the structural pivot story? That's the mistake. Assuming a reopening returns trade to the old routes. Once shippers invest in Arctic fleets, once governments build corridors, they don't switch back. The pivot is the point. The closure is just the catalyst. I hear ya, but I still think you're underestimating the power of inertia. Trade routes don't die easily. Suez has survived wars, closures, and blockades. Why would this time be different? Because climate change is permanent, and so is China's Arctic investment. The route gets cheaper and more reliable every year. Suez's costs are stable and risky. That's a structural difference, not a cyclical one. Fair, but let me throw one more wrench. What happens when the strait opens and oil prices drop? Wouldn't Iran come back to the table? And wouldn't the UAE restart trade to rebuild their economy? The decoupling isn't permanent. The UAE has already diversified into trade hubs, logistics, and re-exports. They're not going to bet their future on a restored relationship with a sanctioned Iran. The trust is gone. The UAE-Iran link is a casualty, not a pause. So you're saying this closure, even if it's never real, rewrites the map permanently? That's a bold claim. But I've seen it happen before with pipelines. Once you build it, you use it. Maybe you're right. That's exactly it. We're not watching a crisis. We're watching the last chapter of a 20th century trade map being rewritten. The Arctic, the Caspian, those are the new lines, and they're drawn in ink, not pencil.
Ink, huh. I'll concede the map is changing, but I'd counter that the ink is still wet. A single thaw in diplomacy, a single White House decision, and the Arctic route could be a footnote. It's a pivot, but maybe a reversible one.
Reversible? Only if you can reverse the ice melt and the billions China's spent. The Straits of Hormuz may reopen, but the trade geography has already moved. That's the story the headlines keep missing. Finally, on the last theme of whether the trade pivot is reversible, the dialogue concluded that the ink is still wet, but the investment in icebreakers, Arctic fleets, and corridors is permanent. Climate change and billions spent make the old routes less viable, so even if Hormuz reopens, the geography has moved. That is all for this episode. Thank you for watching. I hope you found it worth your time. Subscribe and turn on notifications so you do not miss the next one. Leave a comment below with where you think this goes. See you next time.